Gold is now outperforming consumer prices, and it has been strongly outperforming consumer prices for the whole of this century, since the year 2000. We're setting a bit of a historic precedent here.
Was it really that event that caused the rally to go up?
The economy is going to start suffering pain.
That's going to be bonkers. Welcome everybody to another episode of Talking Trades. And of course, we have Kevin Wadsworth and myself. And today we're going to be reviewing capital rotation process, our confidence levels, where we're at in the process of all this. It's critical for you to understand this. Your investments depend on it. Kevin.
Yeah, thanks, Pat. We've spoken about the capital rotation process in the past, of course, and I think it's right that we provide an update, really. I don't want people to think that we've forgotten about the capital rotation process and the capital rotation event. It's really important that we keep on top of that, and everybody is well aware of what is going on. So I'm going to share my screen. I'm going to run through the evidence and the charts that tell us that the capital rotation process is continuing, much as we said it would, and that the capital rotation event is highly probable and approaching. So let's just share my screen. And of course, the capital rotation process is something that shows itself in different charts at different points in time. And this chart here, I'm just going to put it onto the quarterly time frame, actually. It's the money supply to gold ratio chart. And if I just expand it out a little bit so that you can see it properly, this is US M2 money supply. When the chart is going up, it means that money supply is outperforming gold. And when the chart is going down, it means that money supply is underperforming gold, or put it another way, that gold is outperforming the money supply. And the previous gold bull markets have been shown on this chart by huge moves to the downside. That was the gold bull market from 2001 to 2011, and then money supply began to match or outpace the price of gold, and then it broke down again. And it actually broke down in sort of the early part or mid part of 2023. So that was one of the first sort of signs, one of the earlier indicators that capital rotation process was getting underway. And so we started looking to other charts. At the time, gold was around about $1,800. And of course, the price of gold has actually doubled since then and has moved up to sort of well over $3,000, $3,300, $3,400. So a big move already for the price of gold, as that chart predicted. Now, moving on, we've got the US dollar index versus gold. And the US dollar index, the DXY, when the chart moves down and when it breaks down below support lines, it's telling you that the relative strength of the US dollar is not able to keep pace with the price of gold. So each time we break down below a support line and head down, that coincides with a gold bull era. It happened in 2003, and the chart moved down all the way to 2012 there. And previously, it happened in the 1970s and bottomed out in 1980, just as the gold bull market reached its peak. So when it broke down again, and this was back in the early part of 2024, it added weight of evidence to capital rotation. And of course, since then, the price of gold has gone up by hundreds and hundreds and hundreds of dollars. So that was correct. You know, it was right what it was saying. It was right in its message that gold was going to enter a period of strong outperformance. Now, we've got gold versus CPI here. I'll tell you what I'm going to do. I'm going to get rid of all of these annotations just to focus on what really matters. And what really matters now, if I just take a trend line, is that we broke out. And this is a quarterly time frame chart. These are quarterly candles, and we broke out in the middle part of 2024. So you see these charts are all giving their signals at slightly different points in time, one after another, after another, after another. And gold is now outperforming consumer prices, and it has been strongly outperforming consumer prices for the whole of this century, since the year 2000. So for the last 25 years, gold has been very, very strongly outperforming consumer prices. And that came on the heels of a 20-year period from 1980 to 2000, where gold underperformed consumer prices. So we're playing catch up now, you could say, and gold is pricing in all that inflation. Gold versus producer prices, if you prefer PPI as your measure instead of CPI, it's telling exactly the same story. We've broken out again in 2024, the early part of 2024, and we're moving strongly to the upside. And gold is forecast by ourselves, or was forecast by ourselves when it started to break out, to move up by hundreds of percent. We said that gold would double, and then it would double again, and then it would probably double again. Well, gold has already doubled from the point at which we first said that. So the roadmap is perfectly on course. We've got currency in circulation versus gold, which is breaking down. It's another indicator of gold being in a strong bull market. You can see the areas I've highlighted with the red ellipses here. And each time you get a strong downwards move on this chart, it coincides with a massive bull market for precious metals and a disastrous sort of bear market for stock markets. So we haven't seen that bear market for stock markets kicking in yet, but this chart is one piece of evidence that is something we've got to look forward to. The equal weighted S&P versus gold. This is an interesting chart. I'll just put it on the monthly time frame for you, because it gave a breakdown signal quite a long time ago. Actually, we broke down almost a year ago, and in fact, we're putting in a topping pattern for several years. So the equal weighted S&P was making no progress versus gold, really all the way back to 2015-16. And then the chart broke down, which meant that gold is very strongly outperforming the equal weighted S&P. Gold versus the New York Composite Index, same story. Gold is breaking out strongly versus the New York Composite Index. And the Dow to gold ratio is one that a lot of people use as an indicator. And the Dow to gold ratio delivers these signals on a cyclical basis. The last one we had was up in 2001, 2002, when the chart broke down below the moving averages, below the Ichimoku cloud, and we went into a massive bull market for gold and a bear market for stock markets. The same thing happened in the late 1960s, early 1970s. The chart broke down, massive bull market for gold, bear market, and a lost decade for the stock market. And the same thing happened in the 1930s, of course. Massive breakdown on the chart. Gold goes into a big bull market, and commodities and, of course, stock markets had a terrible time in the late 20s, 1930 in particular. So the same thing's happening now. You can see the breakdown. If I zoom right in, we've broken down below the moving averages, below the support levels. We've formed a little bearish rising wedge here, actually, and we've just broken down again. So the signal continues to be firm from the Dow Jones and also from the Russell versus gold, which has broken down below the moving averages, below the Ichimoku cloud, and continues in its downward trajectory. Nasdaq versus gold has also broken down below the moving averages, below the Ichimoku cloud, and it probably surprises a lot of people that tech stocks peaked versus gold 25 years ago, and despite the recent recovery, they have not got anywhere near the previous highs, and we're now rolling over into a new bear market for the Nasdaq versus gold. So all of those things together give a very strong evidence case, Pat, for capital rotation process. And just to finish on the gold versus S&P chart, there's a line on that chart that I've marked as the CRE line, the capital rotation event line. And if I put it on a line chart there, you can see why, because that red line, marked the CRE line, will give a very strong signal, if and when we break above it, that the capital rotation event is happening, as well as the capital rotation process that has been ongoing for several years, as I've just explained. And it'll be extremely clear when we break out above that horizontal black line there. I'll just put the candles back on the chart there. That horizontal black line at around about 0.64 on the ratio chart. Breaking above that will put it beyond any doubt. But I suspect that when we break above this red line here on a monthly closing basis, that is likely to tie in with a capital rotation event. So to sum it all up, Pat, everything is on course, much as we've been saying for the last few years, in fact. And gold, silver, all of these things, commodities, and eventually oil have very good prospects of having their bull era over the next 3, 5, 8-10 years even. So you do have to be very cautious on stocks going forwards. So, that's it for the capital rotation update.
That's a brilliant, very telling charts, big picture stuff, lots of value there. Guys, everybody like, subscribe, and keep following us for more great content like this.